Okay, guys, welcome. Thank you for attending my webinar. Now, today is the 5th of April already, and 5 days of April, the 5th day of April have just, begun. So we are at the Bretton's Mondays webinar. So Monday is more like a week ahead webinar. So let me just introduce you to our Bretton page. This is more or less like a temporary one, actually, Bretton.institute, the website. And we are coming up with an actual website, which is Bretton.academy. So we also have the YouTube channel. So in this YouTube channel, I just want to inform most of the traders is where we put all the recordings as of now. Okay, so as of now, all the recordings are going to be here. That means today's webinar and all the webinars are going to be recorded. Now, what you will find in this webinars are also, we talk about the market. I give you trading signals as well, and I show you how I come up with the trading signals as well. So you can watch it all here on YouTube channel itself, Bretton Academy channel. And also what I am going to be doing is I will have loads of little tutorial videos as well. So like, for example, we have chat with Alfred. He's mentioned about the cup and handle pattern. He wants to know a little bit more about it, for example, then I can make a video out of it. So I'll create in-demand videos for certain topics as well. So something is not clear, feel free to ask me, and then I can make a video, create a video out of it as well, so that you can watch it, you can go back to it and then understand it more. So I can create even more volume or an extension of that video as well, so that you can actually watch it from the first level, second level, third level, things like that. Okay, so this is what the function of the Bretton Academy YouTube channel is. We also have the Bretton Facebook page, so you can go onto the Facebook page. The function of the Facebook page, I am thinking of putting the signals, written signals. Okay, so whatever that I have given out in the webinar, I will actually, even before the webinar as well, I will actually put in this kind of format, so that you know that you have a screenshot, the title, which instrument you can buy or sell. So here, for example, it was for USD JPY sell signal short-term 10 pips already hit, I think, and TP 1130 take profit, stop loss here and stuff like that. Okay, so that is just a bit of a suggestion there. So I prefer to put it in written format on Facebook page, and then the same signals or even more signals are actually in our webinar section. Okay, so let's not delay further. Now I just want to talk a little bit about what's been going on in the markets. So here, for example, I like to use sometimes the news section of Daily FX, but Daily FX is owned by a brokerage called IG. Okay, so Daily FX used to be owned by another broker. I forgot the name already. FXCM, yes, but now it's been bought over and taken over by IG Market. Now, IG Market is predominantly in Singapore. So quite a number of my friends who work in Daily FX, they are in the US and also in Singapore based. Okay, so they're quite good in a way whereby if we just read the headline, sometimes we get a little bit of an idea, but I never trade straight away onto the headlines, because we do have some traders trading straight away onto the headline, and then the headline says, for example, bearish or bullish. Let's say this one here, Canadian dollar price forecast, CAD/JPY may rise down. It's quite confusing. So may rise, and the road may rise down the road despite Ontario lockdown. So now we know that Ontario in Canada is in a lockdown. Okay, but then they are focusing on CAD/JPY in terms of the pair that they may choose to trade following what is actually happening. So I like to read the headlines, but I like to reanalyze and help traders to understand it from a technical perspective as well as the trends perspective. So here, for example, why a rise in retail trading may signal another mania. So we are expecting quite big volatility as well, coming very soon before, just after all the Christian holidays as well. So we're getting a lot of signals on movements on certain pairs. And then we want to look at gold as well. If you look at up here, for example, you can see down market on Euro USD. You see that little graph coming down. You can see that oil as well. You can see everything's on a sideway, but then Euro USD is on the downward movement. We want to take a look at the technical side of it for Euro USD later on to find where our entries are, exits as well. Okay, so I like to look at the headlines only, just so that I get updated with the headlines straight away, because the timing that they do it is quite good, meaning that the people who analyze the market, they've got a very big team in the UK or in the US and things like that, and they operate around the clock as well. So they actually find all the information, updated information and real time, and then they put it on here. So I like it like that, just so that we are ahead of the news in a way. But I also use my own terminal here, which is a news terminal that I subscribe to. And this one here is good for the COVID cases. So I will update, usually I update traders as well with regards to COVID cases, especially in the US and in the UK, because it is largely connected to the economic situation in terms of how the economy can actually run smoothly or not, whether people are locked down in London, or whether in London, especially because of the highly traded forex market is actually based in London, not in New York, not in Chicago. But if you are talking about if you're talking about commodities, then we want to look at Chicago as well. So sometimes there's, let's say storm or tornado or whatever that hits on that side of it, then you can see that it actually impacts more equities and commodities market when it comes to New York and Chicago. So it's not really impacting a lot on the forex side of it. But when it comes to London, then yes, it can actually impact the what do you call that, the movements of currencies. But the best part of it all that I want to tell you guys is that when something happens, like a natural disaster and all that, in New York or in Chicago or in all the major cities, it usually holds, or it usually closes all the market. But then when it happens in London, because London covers Forex, it doesn't actually stop the Forex, the movement of Forex currencies will actually be much higher, okay, more volatile. So this is the good thing about trading Forex. Chicago is the Chicago Mercantile Exchange, is for commodities. It's just the way it has been for more than 50 years. So New York has actually been, the NYSE. So NYSE, New York Stock Exchange, basically covers mostly the equities market of the world. So majority of trading activities on equities are in New York. Majority of commodities has always been from the Industrial Revolution time as well, has been in Chicago. So Chicago covers that side of it, New York covers that side of it, and London is your heavyweight champion for transaction for Forex, okay, mainly for Forex. Now the London of Asia is actually Singapore. Okay, so in the whole of Asia, Southeast Asia, the one that has the highest transaction in terms of currencies, as well as stocks, financial trading, and all that kind of thing, but especially currencies, is actually in Singapore. So before this, I think about 10 years, 15 years ago, it has been known that the Forex market has always been trading anywhere between 3 trillion per day, that kind of thing, 3.8 trillion a day. But nowadays, it has actually been already about 5.8 trillion, almost 6 trillion a day traded in Forex, okay? So in 2014, what happened was Singapore actually created a bridge we call it a fintech bridge between Singapore and China. So that's why you see Singapore has got loads of money coming in from the high tiers of China, Hong Kong, and all that, right? Coming in. So they are now, Singapore is actually having the most advanced fintech bridge, and there's a lot of money flowing in. And in 2014, Singapore itself has actually increased that 3.8 trillion per day to 4 plus plus, and their contribution was 1/3 trillion per day just in Singapore because of the Chinese money and all the other foreign money as well. I think we've got about 600 plus thousand expatriates as well, but then we're talking about how many mini fintech bridges there are, for Europe and US and all that kind of thing. So, and also Singapore has been awarded the safest place to actually store physical gold. So they've got an award, and then there's a lot of Sharia gold have actually gone into Singapore as well. But nobody talks about it, but Sharia gold was launched 2 years ago, which basically means that before that, the Muslims and the Arabs and all that basically are not allowed to keep physical gold. Even in banks, especially in banks, they're not allowed to keep the physical gold. But then now they are allowed to keep the physical gold, and they can actually earn interest from there as well, from keeping physical gold. So then there was another bridge that was created as well, and that involved Malaysia as well in Bank Islam. So the Islamic Bank, which basically has got a lot of foreign gold from Saudi and basically Dubai and all that kind of thing. So this is why we can see that Singapore has got a huge potential in this area of transactions in terms of investments and all that. It's also safe. It's also known as a safe place, not safe haven, but safe place for operations and security and privacy, not piracy, anti-piracy, but more on privacy side of it. So yeah, so that's basically it, what's been going on so far. COVID cases in the US is not very drastic. It's increased, but 30.49 million from the 30.24 million to 30.49. But the death rate rose as well, 553.7 thousand to 552. So the gap is not that drastic. So it's not really impacting the market so far. Now, the thing I want to actually explain as well is that when we hear the news about COVID, when COVID situation is really bad in the UK and also in Europe, what happens nowadays is that the US dollar start increasing because the US dollar on that other side of the world will act as a safe haven, okay? And then you will see gold drops. So I will repeat this. This is actually very important because the dynamics of correlation have actually changed a little bit, like how we always think that US dollar, CHF, gold are all safe havens. But US dollar is also a safe haven. But US dollar becomes more of a safe haven in different scenarios. So in the scenario of the COVID situation, when COVID happens in the UK, Europe is, let's say, lockdown now, it's got even more, I think, third lockdown or something like that in Germany, all this kind of stuff, then you will see that the US dollar start to actually appreciate and then have a stronger ground as a safe haven. And then you will see gold actually dropping as well. So we want to have that triangular correlation as well. Just when you are in front of the news, you can do that analysis yourself very easily, just to connect the three, what is happening in Europe in terms of COVID, and then what is happening in the US. And then these two things could actually then impact gold's prices and also the US dollar crosses. Okay, so this is actually quite interesting, but this has been quite strong in terms of that triangular correlation at this moment of time. Okay, so that's basically it. Let me just share a couple of other things. Let's go back here. I've also noticed a couple of patterns and a couple of trading opportunities I will share with you right now. And I see that IG Daily FX have actually released that as well, especially with CAD I've seen the potential there as well. We've got lots of patterns now starting to emerge. Okay, so it's a good time to trade, to actually trade breakout of the patterns, not breakout of a range trading. That's two different things. So breakout of a pattern. So a pattern that is just forming, and then it's the time for us to enter because it will actually form the part that we need to enter. I will explain that a little bit more. So here, for example, you can see April 4th, which was yesterday, Sunday, they've released something about Euro AUD. I just read the headlines a little bit, and then I match it with what's going on. Okay, so here it says short. So a lot of euro crosses are given signals to short. And then when I look into the trend overall in Europe as well, fundamentally or news, it is showing that a lot of things are happening on the negative side because of COVID, because of the economic impact because of COVID as well. That basically is causing a lot of issues in the top three economic superpower in Europe, which are Germany, France, and Italy. Okay, so Germany especially is the top of the list of the most, modern high-tech country in the whole of Europe and contributing the most to the economy of the Eurozone. But then it is suffering at the moment with a lot of things, especially affected by COVID. So with that, we are looking at all the Euro type pairs may actually be experiencing loads of what do you call that, bearish opportunity for us to enter. So let me just also go on to the what's important is the economic calendar as well. So I just simply use the FX Street economic calendar just to look at what's going on this week in terms of what economic data will actually be released, and the outcome of these data will further fuel whatever that is going on in the country as well. So as of Monday, today, the 5th of April, we see that we have got one high impact news that revolves around manufacturing side of it, a manufacturing data that will impact the economy as well. So this is one to look out for, but we don't need to wait and see the results and then trade based on the results. No, we can actually follow the news as well. The news will actually start to come out to give us a little bit of hints, and then we also match it with what's going on with the US dollar. So you guys do realize that I don't go onto the chart yet, mainly because I want to be sure of the fundamental. Now what we are doing is fundamental intermarket analysis, we call it, okay? Just to connect a few things in the area of politics, COVID as well nowadays, as well as economic data or political situation, economic situation, business situation, or also another thing, the act of God. If there's anything, you need to always be aware of anything, especially like storms hitting or huge things that we don't have control with, especially in big regions within a country like US. Of course, if it is Chicago, New York, it will impact the market quite a lot. Okay, and if it is in the UK, it's London, and if it is in Europe, it's the main superpowers, economic superpowers: Germany, Italy, France. Okay. All right, and if it is in Asia, Singapore, okay, very, very big, Singapore, Hong Kong. So these two. Okay, guys, let's just check. So tomorrow onwards, Tuesday, we've got a little bit more. We've got two, but it revolves around Australia. So we will expect Australian dollar to move from today itself, because we've got the interest rate decision coming. Now, the Australian dollar and New Zealand dollar has got a lot of correlation with what goes on in China as well. So if you guys notice it or not, I don't know whether you guys notice it. Nowadays, for the past 1 year, when you look into the economic calendar, there is a lot of similarity in terms of the timing, in terms of the day that the economic data is released for China. If you see economic data released for China, you will also see economic data releases for Australia and New Zealand, like what you see here. You see, and it's usually has got to do with the manufacturing data of China, and manufacturing data of China impacts Australian dollar and New Zealand dollar, okay, because they are the biggest trade partner in the world. So New Zealand dollar, on the other hand, just follows like a little sister of Australian dollar. So when Australian dollar goes up, it will follow at the slower pace, but it will follow through the same trend, and the same goes when it's downtrend. So you can group it up with what goes on in China, impacts Australian dollar and New Zealand dollar. And whatever happens in Australian dollar and New Zealand dollar impacts a lot the minerals that Australia exports, precious metal as well, like copper and all the other minerals that has been that basically exported on a large scale to China. Then China uses all these raw materials, make the finished product, and send it back to Australia and New Zealand. So this cycle has actually been going on for over 20 years already now. So this is basically what has actually happened. The last 10 years or so, it's been increased, basically, their trade relations between Australia and New Zealand and China. It's sort of an unbreakable type in a way at the moment, because they need each other on a large scale. Okay, so Tuesday is that, and then let me just go up here. You can actually do a filter right there. Oh, let me just check. Advanced filter this week. Yeah, and I'll apply that. Okay. So we can see that Sunday didn't actually have any surprise events. Sometimes you do have surprise events where they will announce GDP of Tokyo or Japan. Japan loves having all these Sunday meetings and Sunday decision making as well. Okay, so not only Japan, the other countries as well. But then sometimes you want to just look on a Sunday as well on the economic calendar, just in case these things could actually surprise a market, and then we just get surprised by it and wonder why all this move and there's nothing on the news, but actually it's Sunday's news that was waiting for the market to open on Monday. Okay, so Monday here we have that's Monday. We go down to Wednesday. Wednesday looks like loads of data, but then mostly medium range type data. But I would guess that you've got a mixed bag of loads of trading opportunities as well. So okay, but we've got the FOMC meeting, which is really important by the Federal Reserve, and for the US, so that would impact the US and also gold. I'm just looking at it very quickly. You've also got the federal chairman's speech after that, one day after, which is on Thursday. Then Friday, we have a few, and it revolves around the Canadian dollar quite a bit. And I would also look into Australian dollar and New Zealand dollar, mainly because on Friday, you have the consumer price index of China. So remember what I've mentioned earlier on, whatever happens in China does actually have got a bit of a correlation, not a bit, quite a strong correlation with both Australia and New Zealand. So hence the reason Australian dollar and New Zealand dollar would be impacted most probably. But we want to look at the follow through of the whole week. Okay, that's it. So now what I want to quickly do is, before we go on to the chart, just take a look at the heat map right here, which basically will help me a little bit to pick the right pairs for us to actually create signals out of it and then enter the market with these signals. Okay, so as you can see, as a bird's eye view, you can see that straight away you've got loads of activities here with long bars. So red bars indicates selling, a lot of selling of the base currency, which basically means all this highlighted euro. Most of the traders in Asia during Asian session has been selling the euro. Okay, so then when it comes to the European session, that is not fully open at the moment. southern European countries are already open, but then, London opens at about 8 o'clock, which is 10 o'clock my time. Another half an hour or so, then you see that, London open would actually impact more movements. But at this moment of time, it is still on the sell side for most of the euro pairs. Okay. And we can see that in the news, in articles as well, in various places, are just giving us more sort of negative sentiments, selling sentiments. So this is the trend at the moment, but we just want to confirm with the charts as well whether or not euro is really on the downside. So we want to check with certain pairs. We don't want to be trading, for example, or check pairs that has very low volume of trades here. Or maybe if we go on to the action forex right here and we go on to the top movers, just to get an idea whether or not the euro or euro pairs are actually in focus by most of the traders. Are they in focus or not? So at this moment of time, if you look at this table right here, the one that is in focus are actually New Zealand pairs. Okay, so you got New Zealand, New Zealand, New Zealand, but there's no New Zealand news, right? But then there may be Australian news. So New Zealand, they have always a reason why. Sometimes we cannot pinpoint exactly why the investors and the traders are focusing on certain currency pairs. Okay. So here you got top three are all New Zealand oriented. New Zealand dollar versus New Zealand versus the dollar, the JPY and the GBP. But then most of the New Zealand traders and investors at this moment of time are actually selling the New Zealand dollar. Why? Because you've got a negative symbol here under this change column. If it's negative, meaning it's selling for the first currency on the left. Okay. So here it means sell the NZD, buy the USD, which basically means NZD is perhaps on the weak side and then USD is on the upside. Okay. So here we have 4 dots as well, which is a good thing, which basically means that NZD USD is quite strong on a downtrend, mainly because it is showing the downtrend on 4-hour, daily, weekly, and monthly chart, which is a good thing. But what we need to do at our end when we get into the charts is we need to go on to NZD USD, like right now, for example, and I just want to look at NZD USD and I want to confirm with my own way and style whether or not it is actually still, number one, downtrend for the NZD, and number two, whether there are trading opportunities for us in which time frame and we can enter or not for now. That is the most important thing. Okay, so here, let's just go on to NZD USD. Oh, there it is. Okay, so very quickly, now we're doing technical analysis, and now the function of this technical analysis is to confirm the trend and to confirm whether there is an opportunity for us to enter the market. And I will start with the 1-hour chart. Now, with the 1-hour chart, we are expecting downtrend, right? So we want to know, we compare 1-hour, 4-hour, and daily. We have these 3 lines here. The candles, if it is downtrend, we need the candles to be under all these 3 blue lines, these 3 lines here, okay? So these 3 lines are the exponential moving average, the 200 average movement, the 50, and the 100, the 50, the 100, and the 200. So we need these candles and current price to actually be under the 3 lines, but it is not happening at this moment. So there is no downtrend at the moment on the 1-hour chart. We need all these 3 time frames to at least give us a match that says to us it's all downtrend, then we can actually enter. So we need to compare it with a 4-hour chart as well. Now, the 4-hour chart is showing that it's towards the downtrend. It has not completely, the candles have not completely gone under all these 3 lines or 4 lines. Just the 4th one here is the 8 EMA as well. If it has gone under all the 4 lines, then we've got more confidence that it will actually be for the short to medium term to actually be falling. At this moment of time, it is very unpredictable. Okay, so then we go on to the daily chart. We can see unpredictable again. So when we see a lot of mismatch, even though we see it on the table, or this can actually happen to anyone, okay, can happen to the traders out there, whereby other people are telling you, okay, we can actually buy NZD, we can actually sell NZD USD because it's on a downtrend. Maybe at that time it could actually be good for that particular trader, or that trader have probably gone into the market earlier, may actually have got some profit out of it as well. And it's very important for you to double check and confirm whatever you hear. Okay, even from me, we need to check basically on real time onto the chart. Like now, NZD USD is not a good time for us to sell. Maybe it is still taking its time to happen for the selling, because a lot of other bigger traders and investors have probably gone into the market much earlier than us. Okay, and they have got a reason for them to actually dump in a lot of selling. But for us retail trader, we are not supposed to enter now, because we will get trapped and we will lose money. Okay, because the trend is not clear at the moment for NZD USD. So let's now go back to this area here and go on to the action forex and get a bit of a help from the currency heat map to see which currency pairs or currencies have got a clear trend. Now, if I go on to the daily chart, for example, you can do that on the 4-hour. On the 4-hour chart, you can see that you've got more very dark blue, dark blue or dark red columns. Okay, you've got one under the USD. What does this mean? This means on the 4-hour chart, it is expected for all the other currencies to be much weaker. Dark red means bearish or much weaker than USD, which basically means USD is strong, but all the other currencies here are much, much weaker than the USD. So, okay, USD has got 4-hour chart. I will write it down in my notebook. Okay, the USD is expected from the heat map itself is on the upside. All other currencies are also very strong against the Australian dollar, which basically means Australian dollar is on the downside. Okay, there we go. So, and then we go down to specific pairs and we see whether we got all these dark blue columns and dark red columns or not. We don't really get dark red columns there yet. So that actually means that the trend, most of the trend for all the currencies may just have begun. Okay, but mostly you can see it's blue. Okay, you can see this area here. So you can see that you would expect USD to actually have more dark blues. So okay, it's happening at the moment on step by step. I think it's happening in the 4-hour chart, and then with Canadian dollar is getting much stronger as well, because it's strong on the 4-hour and it's strong on the daily. Okay, and we expect Australian dollar to be weaker. Let's look at Australian dollar, and you can see that it's getting weaker. It's turning from dark red, red only to dark red perhaps, but then it's already started this downtrend thing from the 4-hour chart. So strong downtrend here on the 4-hour chart, but we need it to have more strong downtrend dark red as well on the daily, on the weekly, and on the monthly. Then the solidity of that pattern as well will be much better. Your probability to hit your take profit as well, which be much better. So here we are expecting US crosses, Australian crosses to actually be perhaps our choice today to actually look at, see whether we have any trading opportunities or not. But then as the days go by afternoon, my time here, another couple of hours, let's say, then we will see more trading opportunities directly. So here, for example, still not really that clear. We just see market participation here. We can see that the euro market participation is getting higher. We can see GBP market participation as well. We can see all the bars, but you see Australian dollar in Asian session has gone down already, meaning that all these bars became short, meaning that they have gone out of their trading. It's not high volume anymore, but it has been transferred now to the European session, which basically gives us an idea that Australian dollar is indeed quite weak and the bars are quite long. So this actually means that now maybe the US session and all that would probably be picking up, but we need to go and find it specifically onto the chart. Okay, let's do this. Let's go on to the US crosses first, okay? And let's see what we have. This is all too messy here. So what I'll do is I'll just clean it up a little bit, just get rid of all the lines that we don't need and writings and stuff like that. And we have USD versus the Canadian dollar. Now, USD, as you have seen, is expected to be on the upside. Australian dollar, on the other hand, is expected to be on the downside. Okay, so we want to look at USD CAD and go onto the 1 hour chart and look at what's happening. Now, we have candles moving quite a lot, USD CAD at this moment of time on the 1 hour chart, but trend is not clear. The three lines is not actually up. Candles are above a little bit, but it's just picking up. But let's compare with the 4 hour chart. 4 hour chart, loads of confusion, still confusion, because we don't see clarity in terms of trend. When I talk about clarity, I talk about the three lines. If the three lines are going downwards, or all candles are under, that means a downtrend. So it's a downtrend on the daily, sideways on the 1 hour, sideways as well in a way in the 4 hours. So that just doesn't have a very clear one type trend for USD CAD. So what we then do is we go and look for all the other how you call that, USD crosses. We call them major pairs. All the pairs that have got USD in it are called major pairs, okay? So I'm now on GBP USD. So let's look at GBP USD and we go on to the 1 hour chart and look at GBP USD. Is looking like it's got some buying power on the 1 hour chart with that single candle going really strong. But then now we are at 1.3830. Okay, not very nice in terms of its uptrend, in a way biased to the uptrend if we're looking at only the 1 hour chart. But then the three lines are not separated from each other going up like that. If it's going up like that, separated from each other, then the trend is clear. So the trend is not so clear in 1 hour chart. 4 hour, again, it's got this problem. Okay, you've got the three lines like this, but you still have the candles above the lines. Okay, and then if you go onto the daily chart, it's above again. That means the candles are all above. So in my opinion, it looks like GBP USD wants to go up, but then it hasn't found its timing yet. Okay, so now what I would do is that I'll go into the 4 hour chart and I want to look at the average directional movement index. Basically, this indicator will give me an idea whether or not the trend is strong or not. Whatever the trend is, whether it's a downtrend or uptrend, whether that blue line is above 25. As you can see on the 4 hour chart, it's not having any strength of the trend for whatever trend it is. And then on the 1 hour chart, maybe it's just beginning. We don't know yet. And then on the daily chart, it's very low. So what this means is that if the blue line is not above 25, that actually means you have to wait quite long. Okay, you have to wait. So it's no point doing a pending order or doing any kind of trades at this moment of time, expecting it to actually move. It's just not yet the time. GBP is still sleeping. Okay, so it will have its time when it wants to move. Then you will see that your TP will be hit quite fast, or even your stop loss. Okay, it depends. So it depends when you are at the right side of the market. So the speed of it moving and the candle moving is actually based on this blue line here to tell you the strength of the trend. Okay, so when the trend strength is high, then you will see a lot more participation of traders. Okay, right. So I'll get rid of this one here. So it's really no point to actually look into. I'll still insert that. I don't know why I got rid of it, but okay, it's good. So let's look at the majors. We've looked at GBP USD now. Let's go on to Euro USD. I think I've got Euro USD down here. Yeah. also very messy. So what I'll do, I would like to keep this one so I can show you guys the pattern. Right, let's go on to Euro USD. Okay, so USD, Euro USD. Now, what about Euro USD? Now, Euro USD at first glance, when we look at daily chart, we are on a daily chart right now. That blue line is telling us that it's above 25 and it's quite high. And it's telling us that on the daily chart for the long term, the trend is quite strong. But what is the trend? The trend is down, okay, because it's under the three lines and it's coming downwards because it's got lower highs and lower lows. But let's complete that trend analysis with the 1 hour chart first, and then we go to the 4 hour chart. So here, for example, you can see that it's heading lower in terms of the candles, but the three lines is not telling us, it's not going like this down, okay? Three lines separated from one another and going down. So it's still on the sideways, but the candles are biased to the downside already. It's under the three lines. Then if we go into the 4 hour chart, it is clearer that it is on a downtrend for the Euro USD on a 4 hour chart. So what we need to do is to wait a little bit and see throughout today whether or not the three lines becoming clearer to move downwards and then more selling pressure coming down under the three lines for Euro USD on the 1 hour chart. If that does actually begin to happen, and then that blue line goes above 25, then we may have a selling opportunity starting to form, okay? Because that will be matching with the 4 hour, and then the daily chart would also become clearer because we already have the candles under all three lines. Now, I would think that compared to the ones that I have showed you earlier on, GBP USD or the other ones, NZ USD or AUD USD or whatever that is, Euro USD may actually pose to you and us better trading opportunities because we have a bit of momentum picking up. We also have, I think it was, let's check the calendar a little bit. Let's move this down here. Okay. As of today, Monday the 5th. So don't really have Euro news here, but I guess it's been driven by the USD type news. Okay, so we want to look at more positivity as well for USD so that it can pull down the Euro, and then it will create more trading opportunities for us for Euro USD. So let's scout some opportunities right there. Okay, so here let's go on to the 4 hour chart because it's quite clear on the downtrend for the 4 hour chart. Now here I will get rid of this one here. Now I look at the price at this moment of time, and it is showing me that the current price for Euro USD is at 1.1752, let's say, right? So it is very close. If it were to go up a little bit, it will meet the 1.1780 psychological number. And if it goes down a little bit, it will meet the 1.1720 psychological number. What does that mean? That means that there's a high probability for it to come down and then reverse at 1.1720 area, reverse to go up. Or if it decides to go up, then it might go up and then reverse very close to the 1.1780 psychological number. So what we need to do is we need to draw two lines, one under the current price, which is based on the 20 psychological number. Okay, so 1.1720, right? That is here, and then I'll get rid of this one here, and then we've got 1.1780, right? So I've got 1.1780 as well. There you go. Okay, so we've got two lines now, and it shows us that the Euro USD price, current price is trapped in between two psychological levels, one above, which is 1.1780 and 1.1720. So this is a non-trading zone in a way, because if we want to make sure that we are riding the trend, the downtrend, we need to wait until the price drops a little bit more, meets the 1.1720 and pierces through 1.1720 and under for us to actually be able to sell. So if I want to sell right now, I wouldn't, but I will be able to place a pending order under 1.1720. So 1.1710 will be an ideal pending order for a sell for Euro USD. But let us confirm a little bit whether or not it is really a good price, a good timing for us to sell at 1.1710. The reason, the way to do that, to understand whether or not it's good and it will actually be a very strong selling at that time at 1.1710, is for you to actually look to the left. Okay, so when we look to the left previous price, we want to look for whether or not at that time under 1.1720 can we find very long bearish candle. Can we find previous selling pressure from a single body of a mother candle? So from this line onwards, I will color it red, okay? So that you know that it's from 1720 itself. Why we're looking at the downtrend side? Because the trend overall is more, it's biased to the downside for Euro USD. So as I can see, if I were to go like this, from the rate line itself, there is one candle here that is quite long, mother candle. Okay, so with that mother candle, if price breaks out from 1720, it could ride along the mother candle's body and finish at where it has finished before, at 1.1690 area, 91. Okay, so that basically means that if it breaks out there, and then you've got a lot of fundamental news as well, pushing it to be negative, then the euro can actually fall against the US dollar. And the minimum number of pips is about 28, 29 pips. Okay, so because that is only based on this candle here. So I just want to look for longer candle in the past. Can we find longer bearish candle or not? So here, for example, I'll just mark this one here. Okay, we've got some action here. We've got one that broken out from 1720. I'll change this one to blue because this one will indicate the support. Okay, that means where it would end. Oh, maybe let me just check. Yeah, do it like that. Okay, so that blue is the ending of that candle, that mother candle's body. Okay, we've got one here, but it's not, we want a mother candle, body of the mother candle that have actually started roughly at the 1720, like this one here, you know, started there. So then we've got one started here, it started up, no, not this one. So I'm just going to take my time and look very carefully whether or not we've got mother candles starting from there. So now I don't see any, right? So any than the one that I've showed you. So what that means is that we cannot get overly excited for the breakdown of price to the downside. We've got one here that is much longer, okay? We've got one that from there, from the breakout area of the 1720, it actually went 80 pips down. Okay, so we can mark that one as well. So that means that's another option that price could actually fall till there, but we've got a very long one here. So, okay, that's a good sign. So we've got one here, but we've got one that is, I think is the longest one here, okay? Longest body, yeah. So we've got one here. Okay, but we want to calculate only from the time, from the point of breakout area, 1720, to the ending of that body. That one is quite good. It is at 162 pips, okay, potential. So we have got a range from 20 pips, okay, to 80 pips to 160 plus pips. So from 20 to 160 pips potential for a sell. So now we can actually know that there is potential. There are some big fishes there that we can go and fish, because we always want to find, sometimes we can see a lake or a big river or even the sea, but we don't actually even know whether or not, if we stand there all day, we can really catch the fish, whether the fishes are actually swimming in there at that time or not, right? So this is what we're doing at the moment. We want to see whether there were fishes. So there were fishes at that time, at this selling area of 1720. Okay, so we have the potential. Did I actually mark that? Give me a second. I think I didn't mark it. Yeah, I didn't mark it. So I'm marking that now here as well. Okay, that was at 1564. Okay, cool. There we go. So now you have got a little bit of an idea, a route map, okay? A route map on Euro USD, okay? So you've got a route map on Euro USD right here. Okay, so you can see that we need to wait a little bit for Euro USD to fall. And you can do a pending order at 1710, okay? And also, it's not nice, this one here, 1691, which is very close. So I'll just get rid of that one. Okay, so 1720, and then the fall should be expected. And you have a take profit 1660. Okay, 1660, 1710 to sell, 1660 to take profit. And you need to think of your stop loss level yourself. Okay, because let's see the potential first. The potential is at 1710 roughly, and then 1660. Okay, that's 50 pips. All right, so you got 50 pips potential. So your stop loss, because it's Euro USD and it may be volatile, it's probably best, because your potential is 50, it's probably best to double that for your stop loss, because just in case you don't get stop out, so 110, because the average true range or average movement for Euro USD in a day is about 110 pips. So you would need to have your stop loss at least 100 pips, just so that you don't get caught up. Okay, you don't get stop out, sorry, because you might get stop out if you put the stop loss at 50 pips, 60 pips even. It may actually go over that and then stop you out and then go towards your direction again. Okay, but for now it looks like USD is stronger and would be stronger, and Euro to actually fall much more. And here we have got a pattern here, maybe starting A here, B here, C here, and then we can see that it would actually be going further down. Let me just check this one. That's 38.2. Okay, I'm putting this one down here. So this is giving me an indication that price can actually fall down here as well. And this is based on the geometric pattern. So if I draw a geometric pattern from here down here, okay, I double click that and I take that and I bring it down. I use this one here, for example. It shows me that price could potentially fall down to this area here, okay, at 5810 area. So 5811. So then I draw that again. Second. Okay, and that's your A to B. This is your C to D, and now you draw the B to C area right there. Okay, then you attach it. This is a bearish ABCD pattern. Then I pull it all the way down here, and I get this pattern right here. Okay, any questions, guys? You guys, let me just check. Okay, no questions yet. All right, so I've got an ABCD pattern right there. I've got a centroid, which gives me an indication of where I can start selling. So I could have start selling there way above right there. But I prefer to be careful with the trend as well. Okay, so a lot of other traders, maybe if they are fair only based on the geometric pattern, they might take a very early sell based on that geometric pattern right there on the centroid under the 19 maybe 1910. They already start selling, so they would be in profit there. But also we need to be very careful with what we see on the left as well, whether we've got any support and stuff like that. So here, what I can tell you is that even though the pattern looks really nice, trend potentially can be much better and stronger on the downside. As we sell at 1720, I would prefer to look into exiting at 1660 first and then re-enter a sell trade later on. You know why? Because it could come down here and bounce here at the 1650 area, mirroring this area here, because this was quite a significant support with a very strong candle, as you can see here. So it's better not to let price go down. I mean, for you to write the sell trade too low until this area, to better to actually exit before the 1640 area right here. Okay, because this is where the price have actually bounced up, and that bounce was quite a significant bounce of 700 plus pips. So this, you need to actually watch out for this area, and this area has got another support area here, and we have another very strong candle here that has got no wick, and it opened the price there at exactly at 1640 area here where the blue line is. So it's best for you to exit as well there. So this is how we can do a pending order and a safe type pending order as well for Euro USD. Okay, that was a signal, by the way. Okay, for those of you who not realize that was a signal for a sell, but pending order, not to click on your sell button now. All right. Okay, so we are expecting more fuel from the fundamental side of it. Any questions, guys? Anything that you guys want to ask me for now for your trades, especially? I'll be releasing some videos on specific trades as well, because I think I have some more signals, some more pairs, but we are running out of time to go through one by one. So I will create separate videos on them to tell you where is the selling, where is the buying, stuff like that. Okay, so questions? Yes, we can. We'll look at gold, Alfred. Okay, give me a second. Okay, so we know now that USD on the upside, right? So we are expecting gold on the downside, obviously, right? So let's just take a look at the trend side of it. I just want to clear off all this mess here. Okay. There we are. So what we have, this is the 30-minute chart. We go on to the 1-hour chart. Now, 1-hour chart, a little bit messy. We've got all these candles above, but then you see what it's doing at the moment is tricking the traders. Okay, I'll just give you this warning. It's tricking the traders at this moment of time to make them think that, oh, you may have chance to buy gold. Okay, this is what it will make you think. But when you look at the fundamentals and all that, there is very high expectation for the data in the US to be more positive, things to be more positive. So they may be gearing up for a big push onto positivity and making USD go up quite a lot. So if USD goes up quite a lot, naturally the gold might fall, right? So here it's already giving you the hint that things are not very clear. Why? You have got these lines here, 3 lines here, just messed up. Okay, you've got it entangled. You've got the line coming down here and then going up, but not really going up like that. Okay, and then you've got the candles above all the 3 lines as well. So it's just in a mess at the moment. Okay, there's no clear trend. Then you go on to the 4-hour chart. When you go to the 4-hour chart, it's more biased to the downside. Okay, mainly because it's trading in between all the three lines, which is very bad news. No clarity of trend. That is what it means when you see candles inside the three lines, not trading upwards, above, or downwards under all three lines. Okay, if it's in the middle here, touching one of the lines and all that, it's just not good. Okay, so no clarity of trend. Now, if I go into the daily chart, it's again biased to the downside, but then not much clarity as well. Okay, so now when we are in confusion mode, when the market is actually confused, we need to stay out. When you are in doubt, you have to stay out of this trade for gold at this moment of time. Okay, no matter what you see, because it will surprise you, because you will see as though you can buy, but then trend overall not clear in all the time frames. That actually means that they will create a lot of tricks for you to believe that, oh wow, it's going up, oh it's going down, and then you will see all the single movement candle. One candle will go up and then zoop, come down, leave you with a wick, and then you are also dead in your trade. Okay, so we don't want that. So what we do is here, for example, what I can see with clarity is that you have all this top here. You can actually draw probably a trend line right there. Okay, so all the wicks are touching and stuff like that. So we've got touch points as well. And you know that that is a trend line. Now, for it to go up, it needs to go up, break that red line, go up a bit, come back down, boom, and then go up. So it still needs time there. Okay, now for it to come down, we've got several, this is on a 1 hour chart. We've got all these concentration of candles here, right? So we can draw a horizontal support line or support zone. Now we can take all these ones up here, roughly here. Okay, I just want to touch as much touch points as possible on the body. Here as well, it's not bad, but I go lower a little bit there. Okay. Okay, so more or less we have all this support. Okay, support, all this, all in within this range, got that support there as well. Yeah, so when I put a line on one support, it touches all the other supports as well, and this is quite good. So I'll put another one right here. This one is here, and then here, and then automatically it touches all these resistance as well, so which is good. So now you can see that I have got a range, non-trading zone here. Okay, from here to here. You cannot trade here, cannot trade if price is in within this rate box between 1726.59 to 1719.16. Don't trade in this box. You'll get confused. But for those who are skillful enough to do scalping and range trading, stuff like that, you know, I honestly don't know how to do that, but there are some very skillful traders who knows how to do that. Then they would be actually still trading. But for me as a trend trader, I've not seen a break of a new or a good solid trend yet. Okay, I need this to go up, come back down, and then move upwards. Then I will take that upward movement. Now, if you look at the 1 hour chart, okay, you have this area. Let me just show you. You have this mother candle, a bullish mother candle. Okay, I put this one here, blue color. Okay, and that length of that mother candle is very significant. Okay, very long. And if I measure that, I will put that total different color, green color right there. I want to mark the length of that mother candle in green. Okay, starting from 1730.45 right up to the closing there, that is your buy zone. So you are not in a buy zone yet. It is tricking you now. Okay, it's showing you that, oh, of course all traders will speak the same language of doubt. Okay, which is gold is going up, gold is not going up. Okay, gold is just showing you that there's a price increase, but gold is not going up. Gold is just going upwards at the moment in terms of its price, but its trend is very unpredictable. We have seen it, all of us have actually seen it on 3 time frames, It's not clear. So my suspicion is it might trick all of you to want to buy gold now so that the brokers make more money than us all, so that you will buy and then you get taken out here. Basically, it will start to reverse there and boom, come down. Now, the reason I say that is also because we have a sell zone here, okay? We have a strong sell zone. This is your sell zone, okay? There, that candle there, opening there and closing there. But as it comes down, we need to go on to bigger time frame as well. And we need to look at the power of candles, okay? So now we've got the buy zone area, you know, it's still early, not yet, okay? And we shouldn't be talking about buying at the moment because the bias is to the downside, not upside for gold at this moment of time, because the trend in the US is getting stronger and basically the gold would actually follow through to be weaker as the US dollar goes up. So here on the daily chart on XAU USD, you can see that I've marked that the blues, the green lines there, these are the buying zone, okay? Now, price needs to go in there and starts to multiply, then you've got a potential. But at this moment of time, the trend is biased to the downside, not upside. So you want to look at selling opportunities and selling power. So you've got selling power here. So you have got to be very careful. You've got loads of selling power here. Okay, you've got selling power, all these mother candles there. So as price goes up, it will trick you and then it might actually return or reverse at this area here. This is also very, very powerful area. So I need to draw another line here and not this line. Okay, so that means that this area here, it needs to go above 1745.34, then gives you a signal of uptrend, but it is not giving you signal of uptrend in all three time frame at the moment. Even if it goes up, it will be taken out by all these mother candles here. Okay, so have to be very, very careful. So here you've got a limit here and you've got another limit here. Okay, these are all powerful selling zones by mother candles that have been selling, have been encouraging people to sell, not to buy. So all these zones here are selling zones, not buying zones. Okay, so as it goes up, boom, come down, up, down, if it does go up. But then again, as it goes up, if it does go up, it'll get hindered by all these EMA lines as well. Okay, so at this moment of time, I'm not looking at very strong opportunities for buying gold at all. But selling, yes. You want to make money selling gold? Probably yes. So you might see more selling opportunities as opposed to buying opportunities because you have buying opportunities in dollar and you have selling opportunities in gold. Okay. Is that clear, Alfred? All good? Okay. Okay, perfect. All right, good. So don't click the buy button too much or open any pending order for buys because I don't see it, so much because it's very tricky at the moment because a lot of people want to cover their losses as well. Those who have actually bought gold too early as well. Okay, so they are hoping at the moment go up, and then when they see the moment they see a single candle going up with little bit of price, they think it's uptrend. It's not. It's not the trend. It's just price increase, but it has to increase and it has to decrease as well. So it's just moving as it wants to, but then it has some levels that it will actually respect. Okay, guys, I think that's all the session I have for you guys. I'll be producing videos as I go along the day today, and we'll take it from there. But meantime, you guys can communicate with me on the Telegram group, direct messages, as well as on Facebook as well. Create engagement, ask questions there as well would be great, and anytime. Okay. All right, guys, thank you so much for attending my webinar today. And with that, I want to thank you once again and have a great, happy pipping week. Okay, guys, take care now. Bye-bye.